All right. Okay, folks, I just laugh at this. Okay, so um, let me start out. For those of you who are newer to the group, and ever since November, I mean, from March through July, and then ever since like Halloween, we've been just swinging stuff, all right, and taking profit on the way up. Of course, protecting capital, protecting, managing risk well, all right. So when you have a green day, you have a super green day, and when you have a red day, you have a small red day, if that makes sense. And that's the way we've been doing it with long-term calls, like monthly calls, okay, like minimum 2 weeks, 21 days, 28 days, 36 days, 42. You get the point. And the reason why we do that is because every time the index reaches new highs, it's going to chop around. There's going to be violence. There's going to be $1 candles, 85-cent candles left and right. And if you buy long-term calls, you're not shaken out, all right? And you wait patiently for that move. Of course, we still got to protect capital. Of course, we still got to manage our levels, right? Whatever levels you're watching. If, let's say, 474 breaks, then you got to cut loose, all right? And all that stuff. But this is the nature of the beast right now, is that SPX, and I don't want to sound overly confident, but SPX is going to 4,800 one way or another, okay? So what you can do, right, is to long calls, and if you want to scalp some intermediate puts just in case, sure, absolutely. But look at what happened today. The SPY traded between 476 at the highs and opened at 475.47. So you have a $1.20 range today. So what's happening is that they're burning zero DTEs left and right. Dealers are hedging, okay, and all that fun stuff. So a lot of that stuff is happening right now. But look at this. We closed at the highs of the day. All right. We actually made a new high. Right. And now your SPY candle on the daily, all right, is a full on candle. The index did gain today. It was a very small gain, right? SPX gained like, less than 0.19%. All right. It is what it is. But every time you get to a new level, right, there's going to be these weird movements in the market. So you got to be able to sit through and be patient with the market until it resolves itself one way or another. Like I said, I still think we're going to SPX 4,800. That'll probably take us to about SPX closed at 47.81, so 19 points away. 19 points away puts us around, let's say, 478.50s on the SPY. So QQQ actually made a brand new high today. All right, and I'm not tooting my horn on Apple yet, because yes, Apple had a green hammer day. The news helped finally. All right. The Federal Appeals Court lifted the ban on the sales of Apple II watches. Now, you can still buy these Apple II watches at Best Buy and other electronic stores. You just can't buy directly from Apple. So what we got to do tomorrow with Apple is cross over the 20-day moving average right under 194, 193.97. If you can close tomorrow above 193.97, 194, you have a very, very good chance that Apple's going to continue to rise and get over this whole issue of the Apple Watches. Now, they probably have to do some press release or whatnot overnight, or maybe just like some type of plan to resolve these issues from Tim Cook, from the marketing department, whatever, and then we'll go from there. So, but like I said, your QQQ, hit an all-time high today once again. So every time something hits all-time highs, there's going to be that weird choppiness. But like I said, SPY traded a $1.20 range today. All this was basically just a $1.20 up and down, left and right, to shake people out, and I think, right, to shake people out. But there's a risk. We do have a risk down here at 473 with that gap. SPX does have that live gap there, so we still have to be exercise some caution. All right, so I'm holding SPY Jan 12s, 31st. Okay, I dropped the 19th to take off some risk overnight. Apple closed green, up 10% on Apple calls. We're down about 7% on Oracle calls for now. And A and Y is really kind of the highlight for the day. ANY up about 25%, ladies and gentlemen. We started buying, 2 days ago, a day and a half ago, and started to, really take in some cash here, but 25% up on ANY. So I'll hold some ANY overnight. I'm going to give you guys a quick tip here. And that is this particular chart here. All right. This is the 30-minute. I think if you go through my YouTube channel, I have this video out there. All right. But this is your 30-minute EMA 10 and 50 and 200. All right. You can see that whenever we dip down, all right, this chopper in this range. So what happens is typically, like I said, your 10 and 50 gets spread out too wide, like this example here. You see that orange line and the black line there? When it starts to get a little bit too wide or spread out, the market needs to catch up, or the EMAs need to catch up, all right? So what typically happens is sellers start stepping in, but then buyers start stepping in at the 50 EMA on the 30 minutes. So all that happened today really was that all the dips was just to test that 50 EMA and then bounce. All right. When we start seeing 30-minute candles close below this 50 EMA on a 30-minute, then the next attraction point would be the 200 moving average on a 30-minute. And you can start seeing that this between this and this is starting to get a little wide too. So that's the risk. If there's a pullback, it may pull back down here as well. All right. But you can see in this perfect uptrend, all right, it hasn't been really, it really just hasn't been really pretty, right? But every time the 10 and the 50 is spread too wide, there needs to be chop or a little bit of dip, right, to let the EMAs catch up. All right, so I hope you guys found that little information to be useful, but go ahead and apply it to your charts. 10 EMA, 50 EMA, and 200 moving average on the 30-minute. So with that being said, other than that, Tesla did very well today. Tesla up 261, gained quite a bit. I have an upside target 272. I do not hold a position on Tesla because it's ripping so far. I'm buying the dips on Apple though, because this is the one that has not performed at all in the last 2 weeks of this market, where the market has been making all-time highs, NDX, but Apple has not done much. So I'm going to put a more weight into Apple in my portfolio. All right. So with that being said, sorry this was long-winded. I hope you guys have a great day. See you back in the morning.